Hi Stuart, it's Lee. So today I will be presenting to you about the BlackRock company and I'll just go straight ahead, skipping the agenda, so feel free to browse. So BlackRock company is founded in the year 1988 and previously their name was the Blackstone Group. Their CEO today is Larry Fink. They are one of the largest publicly listed investment management company. So they trade in New York Stock Exchange under the ticker name BLK. The company was currently trading at the stock price of 386.76 as of March 17, which is up by 8.25% from March 16. The company holds 7.4 trillion assets by the end of 2019, according to their reports. Their top products are iShares, iShare ETF, mutual fund, equity, and fixed income. They also use this operating system called Aladdin Investment System. Their top competitor is Fidelity, PIMCO, Scooters, and the company holds 15,000 employees as of 2019. More about their top products, I will put it on the notes since I'm given like super limited time. Feel free to go over them and please let me know if I'm able to express or describe them properly because I would appreciate some advices from you. It's really super interesting in my opinion. So proceeding to their mission statement, which is to create better financial future for our clients, guided by culture and set of principles that ensure we never forget what we stand for. So what are these principles? Next slide, which is fiduciary to clients. They were saying that what they say is what they do and what they do is what they say. Passionate about performance. So the success of the company requires thinking out of the box, how to survive their competitors and how to deliver their services in a very successful way. That they are one BlackRock, meaning that the diversity they have in their organizational culture actually strengthens strengthens them to deliver better results. Innovation has been part of their history and it molded to who they are today. Next is the blue ocean strategy. This is something really interesting because just like other wealth management companies, BlackRock started to offer robo-advisors. So technically from the name itself, they are a robot, but they can give you financial advices. So how it works is like it begins with a digital questionnaire where it assesses your financial goals, expected returns, and risk tolerance. So that is something a wealth manager can do, and that's one downside that they see about robo advisors. Behind that is using robo advisors means that they create new market and they create new demand for that market. So that right there is blue ocean strategy. So with BlackRock offering robo advisor services, they protect their existing consumer to reach out to new low end market. So that's a little sort of differentiation, and it's a low cost to open up new market because right now technology is really part of business and they have to level up in that way. So that is my 2 cents about blue ocean strategy. Next is the strategic management of BlackRock. So they want to offer this new sustainable investing strategy where they will make new products easier for investor to choose socially responsible funds. And about climate change, they would want to address this issue because they highly believe that it can create potential risk to their long-term viability. They also believe that sustainable investment option addressing this climate change issues highly aligns to customer values. So maybe, in my opinion, they see that most of their clients or maybe potential clients would demand investing to investing to a more sustainable or highly sustainable companies rather than investing to thermal coal production, which is the next one. So BlackRock will no longer do any direct investment in companies that focus on thermal coal production by middle of 2020. And by doing that, they would be offering new ETF, which is to increase more accessibilities to sustainable products. So that is their current strategic management. So moving on to their competitive advantage as a company. So they have this strategy where it is designed to generate returns with resiliency by having these features, being able to identify their macro factors, which for them is really important to know, creating investable portfolios, balancing their exposure to risk, and managing risk in different extreme market condition. And by the way, BlackRock actually earns most of its income by having able to give these kinds of advices to their clients. Porter's 5 forces analysis. So what they do for the threats of new income is they innovate new products and services. They also build their economies of scale, and they invest money on their R&D basically. So they build economies of scale so that it can lower their fixed costs per unit, and they highly believe that new products can bring new customers and can attract old customers, or give other customers reason to buy BlackRock's products. And then for their bargaining power of supplier, where they build their supply chain efficiently, they also experiment with product designs using different alternatives. So by doing that, so for example, if the prices of their raw materials go up, then company can shift to another. So they have all those sorts of alternative. Next is their bargaining power of buyers. So in this case, they were saying that BlackRock's customer, they want to buy the best offering at a very cheaper price or minimum price as possible. But this puts the company in pressure, and therefore the higher the bargaining power of the customer, the higher their ability to seek to increase their discounts and offer more promotions. So threats of substitute products or services. So both products, they wanted to be consistently oriented rather than just like consistently oriented to both products and services, rather just being service oriented and being just product oriented. So they just want both of it. And also by understanding the core need of the customers rather than what the customer is buying, and by increasing the switching cost for the customers, so that would save them from that threat. Rivalry among existing competitors, a sustainable differentiation. They would like to build scale so they can compete better. They would also want to collaborate with their competitors to increase the market share rather than just competing for small market. Going on to their Mintzberg's 5Ps, so it is kind of related to going green, or like trying to invest in a greener option, which is about sustainability. So they plan that one. So they would identify what could be the opportunities in the market, and they deploy that one using scenario planning. There was this one article weighing down what if they would eliminate the energy companies, and how is investing into environment friendly company can give them opportunities. So they had that scenario planning right there. Their consistency, so they highly believe that they are very consistent in doing their business, and they believe that that makes them successful into developing in different strategies. Their position, I would say it's about their competitive advantage, which is illustrated in Porter's Five Forces. Perspective, it's about this idea or new ideas that they have, which is going green. Moving on to their financials, I have here their income statement, their balance sheet on a 5-year trend. I would say that the revenue and sales are consistently high. As we know that BlackRock is really a large company. Aside from that, they're very successful in doing their business too. I can only also see here the balance sheet that they have, and I can say that they are using their debt to finance their business activities, because their total debt here is kind of consistently high too, but at the same time they're able to generate sales and revenue. That shouldn't be a problem. And then for their cash flow, I would say that they have pretty good free cash flow. And if I miss to discuss anything here, I'll just put it on notes, because I'm running out of time for their financial chart. This right here is very interesting to me, and if I would answer the question if I would invest to BlackRock or not, I would say yes. Why? Because they have very huge growth in their revenues and net income. They even offer massive dividend payout, and like their stock price right now, or not even stock price, but their return is 40 times higher than from their initial public offering. So from that price on, like their investors who purchased their IPO could probably had 40 times return as of now, and that is huge. That's not something I usually see from other companies. I believe I was really surprised with the return. So having this technical analysis right here, I also researched about it, that their highest was at 572.07 per share during February 19, 2019. So last year, actually 2020, like before the coronavirus and all that, they were at 572, and March 18 of last year, they were at 440 USD, and it never went lower than 400 at all. Come December 12, 2019, last year, it went up to 502, and then it went down again to 463 by February 28. It is when the corona thing happened and is still happening. And right now, as I said from the very beginning, that their stock price is at 386. So having said that, that's really huge downfall, because their highest was at 572. That's a very huge, but overall, having this chart right here, I can see that they're still continuously moving, and they are one of the most consistent companies according to financial advisors when it comes to giving dividends, having this growth and all that. They're one of the best and very consistent. Their momentum is really, really great, but because of the crisis happening right now, it's understandable why it goes down. Everything is crashing anyways. So their human capital, so their commitment to their employees is by unifying their culture, by encouraging innovation. They also keep their best talent. They incorporate their inclusion and diversity within their organizational culture. Employee development, retention, and recruiting. So they do 10 hours of formal training to the newly hires. They have 1,779 internal promotions as of today, and they spend 2,300 per employee per year for completely just training. I can say that there's room for growth in this kind of company, especially if you are someone who has a very good talent, so they would want to keep you and keep on promoting you. When it comes to their rewards and benefits package will be just listed under notes. They also offer retirement plans to their employees. They offer flexible time off and they support working parents. So if I would to answer the question if I would want to work here, I would say yes. Why? Because being in the financial industry is something I really like, and having to work with BlackRock is super extra bonus for me because it's a very good company. It's very well known. It's very large. How they take care of their employee is extremely good. So I think I would end my presentation right here, and thank you very much, Stuart. And I hope you provide me comments because I would appreciate them. Thanks.